Wall Street Shakeout Clinches undergo marketplace label for S&P 500 New York. The S&P 500 ended extra than 20% under its January 3 document final excessive on Monday, confirming a bear marketplace for the benchmark as buyers offered stocks amid worries over whether or not the Federal Reserve might be capable of tame inflation without triggering a recession. A near of greater than 20% below the document high confirms that the index is in a bear market, according to a generally used definition. It is the primary time the S&P 500 has confirmed a endure market since the 2020 Wall Street plunge introduced on by the COVID-19 pandemic. Stocks had been volatile since the beginning of the year, with Russia's invasion of Ukraine in past due February taking a heavy toll on markets. But increasing worries approximately inflation and the U.S. vital financial institutions' financial policy tightening because it attempts to quell it have fueled a good deal of the current sell-off. Major U.S. inventory indexes on Friday posted their largest weekly percentage declines considering January and ended sharply lower after a report confirmed a steeper than expected upward push in U.S. consumer costs in May. My view is that we won't truly see a turnaround for the inventory marketplace until we see some form of pivot from the Fed. And by using that I suggest getting a bit much less aggressive, which I realize is going to take time due to the fact proper now the trajectory is to get greater aggressive, stated Christina Hooper, leader global market strategist at Invesco in New York. The silver lining in all of this is that the extra pessimism that abounds, the extra capability there's for upside, Hooper stated. The S&P 500 closed Monday at 3,749.63, down 3.9% at the day and 21.8% below its January 3 file ultimate excessive of 4,796.56. The Fed is predicted to hike hobby prices with the aid of 50 basis points while it concludes its two-day assembly on Wednesday, and expectancies for a hike of 75 basis factors at the June assembly have jumped to nearly 30% from 3.1% per week in the past, in step with CME's FedWatch tool. One fear is that an competitive push better on fees by means of the Fed may want to send the financial system into recession. This 12 months' downturn is a pivotal shift for the market after its quick and robust post-pandemic rally. The S&P 500 rose 114.38% from its remaining low on March 23, 2020, to its January 3 report remaining excessive this 12 months. The purpose why the marketplace is not bottoming, we suppose, is because there nonetheless remains a ton of uncertainty. And because of that, it is possibly that it will be extremely choppy right here, stated King Lip, chief investment strategist at Baker Avenue Asset Management in San Francisco. The Nasdaq earlier this year confirmed that it became in bear market territory, the first of the three fundamental U.S. indexes to hit such levels.